I just put my entire emergency fund into SGOV. So SGOV is an ETF, which is the iShares 0 to 3 month Treasury Bond ETF, and is currently having a dividend yield of high 4%, currently 4.71%. Now, this is a pretty good dividend yield considering a high yield savings account such as Capital One, which is only going to have about a 3.6% APY, as we can see here. Now, that is a huge difference because you're getting over a 1% return on this ETF. And the best thing about it is you don't have to buy the treasury bonds directly from the US government, which is going to tie your money up for a few months. Now, the best thing about this is an ETF that trades on the stock exchange. So you just buy it and sell it just like any other stock. And the best thing about it is you're going to have monthly dividends. So the first of every month, you're going to be receiving a cash payment. And this is going to act as similar to a high yield savings account. Collect the interest, get paid out every month. But this is going to be a little bit more liquid than direct treasury bonds, and it's going to have a higher dividend yield compared to a high yield savings account, which is below 4% currently for most platforms. Now, if we take a look at the stock price, you're not going to see any capital appreciation. We do have these fluctuations, but that's because it changes with interest rates, and basically before it pays out the dividend, it runs up to the dividend amount. So say it's going to pay a 43-cent dividend, it's going to go to $100.43 and then drop down by the dividend amount the next day. But overall, you're not really going to lose money because it's not going to go under $100 per share. There are some mechanisms in place that is going to keep this NAV price at $100 per share. But it is going to fluctuate a tiny bit, and you may see that in your portfolio. But overall, you're not going to lose money, and it's a pretty safe place to park your extra cash or an emergency fund. I personally have a 12-month emergency fund in SGOV, as well as some other short-term cash reserves into this ETF, and it's been making me a lot more interest than it would have in a 360 savings account with Capital One, as we see 3.6%. Now, a lot of people are also investing in CDs, certificate of deposits, which is going to lock your money up for however long you choose. For example, this 1-year CD is going to give you a 4% APY, and you're going to lock your money up for 1 year. That's not very ideal, and it's a lower APY than, say, SGOV. And I do also want to mention that SGOV is also going to be a little bit more tax efficient. You're not going to be paying any state taxes on the dividends that you receive from this ETF. Compared to interest in high yield savings, you are going to have to pay state taxes. Now, in both cases, you're going to have to pay the federal income tax. There's no getting around that. But your taxes are going to be lowered if you have high state tax, especially if you live in a state such as New York or California. You're going to see a huge difference in returns with this ETF. Now, why SGOV? So you're getting exposure to the US Treasury bonds with remaining maturities less than or equal to 3 months. Now, these are very short-term Treasury bonds. And even though they're short-term, this ETF is more ideal because you can just buy and sell whenever you want. You don't have to manage it, and it does it all completely for you. And you're also going to get targeted access to a specific segment of the US Treasury market, and of course use it to customize your exposure to treasuries, seek stability in your portfolio, and put your cash to work. So if you do have some uninvested cash, SGOV is a great place to place it, especially in a brokerage account. Any cash you're waiting on the sidelines, you could just plop it into this ETF and get some extra interest in the meanwhile. Because as we mentioned, this stock price is not going to drop below $100, and iShares is a very solid ETF company. It is actually owned by BlackRock, which is one of the largest ETF providers. It has $3.2 trillion in total assets, and it has over 400 different funds. So one of the largest funds managers in the space. Now, another ETF that I do want to mention is the iShares 20 plus year Treasury Bond ETF, TLT. And it does have a similar dividend yield of 4.31%, but that's not why I'm recommending this ETF. While the dividends are great and it does pay out monthly dividends, it's going to be how low the share price is currently. It's at all-time lows, and that's because interest rates are at sky-high levels still. So we anticipate within the next few years that interest rates are going to fall, and hopefully drastically. So if that happens, that is going to cause TLT's share price to skyrocket. As we can see back in 2020, when interest rates were very close to zero, that's when we saw all-time highs with TLT hitting $170 per share. So right now it's about half of that share price. But if we see interest rates get cut in half to like 2%, we can easily see this share price going past $100 per share. And that's going to be a pretty sweet gain on a treasury bond ETF. And why else am I recommending it? I don't believe that interest rates are going to rise in the future. Now, of course, we can't predict the future. Anything can happen. But the way things are going, I feel like there's no way that interest rates are going to continue rising. But if it does happen to rise, we're going to see this ETF drop in share price even more. But I think it's going to stay flat at the worst case scenario. And in turn, that is going to cause the share price of this ETF to stay flat as well. So in the meantime, you're going to be collecting a 4% dividend yield paid out monthly. And while you wait for those interest rates to fall, that is when you're really going to see some share price appreciation on this ETF. And you're going to see some really sweet returns for what I believe is going to be very little to almost no risk. So with the SGOV ETF, I personally put in a little over $20,000 of my own capital, which is going to give me a nice, hefty, very conservative emergency fund. And I highly recommend you guys to all have an emergency fund. You never know when you get into, say, a car accident or you lose your job. That is going to take a huge hit on your finances. So you always want to have backup money just in case. And you also want to earn interest on that money. You don't want to have that money just sitting in a regular, say, Chase bank account earning 0.01% interest. A high yield savings account with Capital One or Ally Bank is a better option at 3.6% interest currently. But as we mentioned earlier, SGOV is going to give you that higher yield. It's going to be over 4% dividend yield. It's going to be a little bit more tax efficient. And it trades on the stock exchange, just buy and sell like any other stock. So it's very liquid. And if you do end up having to sell and then wanting to transfer it over to your regular bank or checking account, that's only going to take a few days. It won't take much more than a week. So I would say that's pretty liquid if you do need to use those funds in the meantime. So check it out. SGOV has been a very solid ETF. It's been out since 2020, but it's very stable in my opinion for a treasury bond ETF.